A very good morning, ladies and gentlemen. I think Madam Ashima Goyal made my life easier by putting across the complexities of this economy. I think it is a like real complex economy. Maybe we may have to rewrite some of the economic theories as we go forward. Such a complex economy, and we are a part of it, and maybe some of the things which I will touch is again an extension of those issues which are flagged. The topic which they gave me is something like which can really get some very critical comments. It is on, will bank recapitalization help people and boost credit? Is there any other way out? I think this is the only way. The recapitalization has to boost credit and it has to help people, because the kind of complex things which came in the earlier speech actually, we have not found an alternative for the banking system yet to meet the credit requirement of this economy. Even though bond market, we said that it will evolve, we thought the NBFCs can occupy this space, but I think the events in the last few months have again put the ball back in the court of the banks, and maybe for a few more years, I think bank will continue to be the institutions which will support the growth of the economy. And in that context, let me put across some of the issues on the recapitalization and the issues what we faced and how we are slowly coming out of those issues. The challenge is basically when we talk of recapitalization, people ask, is it throwing good money after bad? Is it wasting the taxpayers' money? So ultimately for the misdeeds of someone, whether the taxpayer is footing the bill. So I think maybe in the next few minutes I would like to address these issues. Anyway, I'm thankful to Outlook Money for providing me this opportunity to put across some of the bankers' perspectives on this issue. Before we get into the specifics of recapitalization and how will it help people and credit growth, it is important that we set the context right. To seek answers, it is equally important to ask the right questions. I will attempt to clear the haze by raising a few questions and then proceeding to share my mind on these. First, whether bank credit growth slowed for want of capital. This is a very important question to be asked, because a lot of people say the credit slowdown is because for lack of capital. The second question is, what purposes have banks used the recapitalization money? Here I would like to put some numbers also when I speak about this to understand how the recapitalization money has been used. Third, where to put money if banks are to lend again? Finally, what we learned from the entire credit cycle that played out in the last decade. So first I will touch on capital adequacy as restraint on credit expansion. It is almost tautological to say that banks need to have capital to lend, as regulations ensure that every incremental exposure is risk-weighted as per the risk foreseen. Accordingly, capital is to be maintained. As a rule of thumb, if I have to lend 100 rupees, I need 11.5 rupees as per the new Basel norms. It comes down if I am able to pick up good customers where the risk weight is lower, which banks did in the last 2 years, trying to bring down the risk-weighted assets so that we manage our capital better. But at the same time, there are certain sectors of the economy suffered because there was a risk aversion, looking for only the good quality assets and high risk-rated accounts, not to lend to the lower risk-rated customers, because that was a strategy of the banks to maintain their risk-weighted assets and the capital requirement. So I think the capital requirement went up. One was the Basel III norms which started kicking in, and at the same time, the huge provisioning requirements which parallelly came in because of the recognition of the non-performing assets in the system. So generally, we accumulate our capital by way of profits. So generally, public sector space generates about 1.5 lakh crores of profit every year. Even 2016 and 17-18, this did not change much despite all these issues. We really generated operating profit of 1,50,000 crores, at least 50% of which could have gone for the capital of the public sector bank space had the provision requirement not there. So this would have really helped the economy to grow. But anyway, we had some inherent issues to be factored in. So to put some numbers, last 3 years, so 2 year, 9 months, I was looking at the numbers. The banking industry made a provision of almost 6 lakh crores in this period, out of which roughly 2 lakh crores came from the government recapitalization. It is not that the whole money went to the provisioning, but most of the banks it went for provisioning for the losses what they did, so that they maintain adequate capital. A rough estimate show about 70% of the money was used for provisioning requirements, about 30% went for growth, and some better banks where they used for definitely leveraging their balance sheet for better credit growth. So when about 2 lakh crores of capital came in, banks generated about 4 lakh crores of operating profits, which also went for the provisioning, which could have otherwise gone for capital creation, maybe would have helped the credit growth in the economy, which was not so. So it went for mostly the cleaning of the balance sheets. So why this problem came in the first place? Because I think most of the audience here, because there are a lot of discussions which continuously take place on the issues which banks face, why NPA happened in such a big numbers, and what happened, like why the regulator could not act, why the government could not act, why the banks did not realize. Anyway, those issues are discussed again and again, and there are a lot of theses, hypotheses on this. I would not like to examine that. Suffice to say, the reasons for the huge NPAs was the huge credit expansion which happened in the earlier phase, particularly on the infra space, like roads, the ports, then the thermal power, and a lot of other industries where the investment was required, and the public sector banks played a major role in funding this infrastructure. Then there were a host of external and internal reasons which came in. External by way of the euro crisis and other issues which came in, and also internal because of the policy paralysis which we saw, and the legal interventions which came in, lack of clearances from various government departments to complete the projects, and then the economy going down and the demand meltdown which also happened. All the factors really resulted in ultimately the accounts going bad, and we had to forcibly go for the provisioning and use a lot of the profits and the government money for the provisioning requirements. So again, another issue is when we talk of provisioning, a lot of people take this as the money lost. I think here, as a banker, I would like to clarify, whatever provisioning, I said 2 year, 9 months, about 6 lakh crores of provisioning, what we did, it is on the expected losses. It is not that this loss is incurred. So this loss is on whatever loss we booked, it is because of the provisions, and also because of the expected losses. If I hold 60% provision or a 70% provision in account, it is not that it is lost. It is lost only when the settlement happens, a particular portion of the amount has to be written off, then only that is lost. Otherwise, if you are able to recover more than what you have provided for, I think you write back a lot of money. So I think this provisioning what we have done, it is a prudent measure by way of banks to clean the balance sheet, to give comfort to investors and the world as a whole, saying that the balance sheets are clean and we have sufficient provisions for anticipated losses. But then I will make it very clear that whatever losses we incurred are not actual losses. It has gone for provisioning, and there is a reserve built for expected losses, and the losses will be booked gradually as we resolve issues one by one. So whether this lack of recapitalization affected the credit growth, I think this is the question which I asked in the first place, and I tried to factor in some of the other views in between. Yes, 2009 to 14, the credit growth was around 26%. 2014, 9 to 14, the credit growth was around 16.7%. It slowed down a lot in the last 5 years. But there were banks with better capital who could have lent. They didn't lend. I think that's where the NBFCs came in. So it was basically, it is not because of the lack of capital, it was one of the factors, but there was basically issues, because the issues may be on the probity, issues may be on the risk management practices of the banks. So whole system somehow lost confidence on the long-term lending for some time. So the credit growth in a major sector got affected. But if you look at the service sector and the personal loan space, the credit growth was very strong. All the banks were lending in that area, and the growth was in high double digits. So actually, if you look at the credit growth, in the banking system, for lack of capital, the credit growth did not stop. Credit growth was happening in sectors where it can happen. But then, because of certain issues which we faced, banks were getting their act together. There was a bit of anxiety among the bankers about the risk management practices and other issues which evolved. So basically, there was some kind of risk avoidance, avoiding lending to certain sectors. I think lack of capital was but for one reason, but there were many other reasons where the banks could not lend at that point of time. So during this period, private banks and NBFCs played a very active role in picking up a lot of share of the public sector banks and growing very fast, which has created its own problems now which we are facing. But then actually overall credit growth in the economy, I feel personally it would have affected to a bit of lack of capital, but then I think it was not the sole reason for low credit growth. So how we use the recapitalization money, the second point. So I think I tried to touch on some of the issues, like it was about 2 lakh crores of recapitalization which came in during this period, about 2 years, 9 months. A portion of that, major portion of that has gone for bank balance sheets, for making provisions for expected losses. So with the deterioration in asset quality and the progressive implementation of Basel III warranting higher buffers, troubled public sector banks received capital infusions via the issuance of recapitalization bonds and budgetary support. Government has infused capital in PSBs intermittently in the last 3 years, but about 70% of the infused capital was absorbed into losses incurred by them. So it is important to note that banks' losses are in anticipatory in nature and not actual losses. So when we examine these aspects that the lack of capital was not the sole reason for slow credit growth, and the recapitalization money went into various areas. So where to pursue the growth now is the second question, because I think at this point of time when we look at the economy, we see the green shoots everywhere. Because as a banker, as a practitioner, talking to a lot of industrialists, business people, there is a lot of activity going on. There is a very positive anticipation of economic revival and growth. So I feel the growth is not going to come from one area, it is going to come from across the sectors. The lead will be on the personal loan front on the services sector, even though there are people who are saying that there's a bubble being created on the retail space, on the personal loan space. I think the better risk management practices across the industry which are being followed, I'm very sure that particularly the large chunk of these advances are very safe, underwritten very with good practices. I don't foresee any problem in that area. And it will continue to see high double-digit growth, particularly on the personal space and the service sector. MSME is going to be the new retail, because if you look at the retail, the growth has happened because of lack of availability of good data points, and whereas in MSME, it is lack of data points which was resulting in low credit growth, because there was stress in this sector, plus banks did not have the right kind of data to underwrite credit in MSME. That is where NBFCs were playing active role. With the coming of GST, I think we have better database today. The data flowing from the PSB 59 portal indicates that about 30,000 new customers got loans. They are new to the bank because of the GST data and the returns they are filing from the system in the last 3 months. This is a huge change. So MSME can be the new retail with the new data points available. Now, having touched on these issues, I would like to say few points on what we learned from all this fiasco. Because ultimately people who have invested, who are the taxpayers through which the money of recapitalization came, naturally they want an answer from us. Actually, what you are going to do? Okay, we have recapitalized, the banks are much safer today, the books look very clean. I think we are poised for a very good credit growth now. So what are the learnings from the system? There have been several learnings, both at individual bank level as also at system level. Accordingly, to address the systemic vulnerabilities, there have emerged new institutions. I will like to share 5 developments which are key to credit ecosystem going forward. First is IBC, the Insolvency and Bankruptcy Code. With IBC, there is creditor in control regime. Now the borrowers are really scared of losing their businesses. We have seen some of the big industries changing hands, the new promoters coming in, and there is today as a banker, I am on the driver's seat. Today, earlier we used to run after the borrower. Now the borrowers are after us because of the new code which came in. We are seeing some fruits, some low-hanging fruits which are already harvested. We will see much more now. But then, this has brought a new change in the credit culture. And going forward, once some of the legal issues are resolved and being answered by the courts, I think maybe it will stabilize and it will give a new credit culture to this country. Second is the shift in regulatory attitude. This is the most talked about circular of RBI, what we call Shivratri circular, the 12th February circular of RBI, which removed all forbearances in the system. Earlier, people say, because when we saw the system having stress, initially we came up with lot of structuring and restructuring models because we thought the Indian economy is strong, the growth will be back, maybe the cash flows will be back, and maybe if you are able to structure the loans and restructure the loans, handhold the borrower for 1 or 2 years, maybe they will be able to come out of the problem. So we were expecting that. So a lot of restructuring schemes came in, like SDRs and S4As. But the regulator realized this is only postponing of the problem, what they call extend and pretend. So I think maybe they drew a final line on 12th February saying that all these things will go away. And from that, a new paradigm shift in the thinking of banks, regulators, and the borrowers came in. So this is the second shift in the regulatory attitude. So third is building of new institution to bridge information asymmetry. Now, it started with RBI setting up the CRILIC, the Central Repository for Information on large corporates. All borrowers having limits of above 5 crores, today the default is reported on almost on real-time basis. So system has better information about customers. The earlier, I'm a banker for 33 years, so information asymmetry was very much there. Many times the borrower will be defaulting in one bank, another bank underwrites credit for him because there is no way we know that he has a stress in another bank. So now I think that is, and then regulator has moved forward, is setting up a public credit registry. And I think that we will see that also maybe in the next few months' time. When it happens, it is one step above that, where we have a lot of information about all the borrowers in the system, about their borrowings, the mortgages, what they create, the charge they create. So this will help, actually, this is an institution which will be of great help to the financial sector. And the fourth is increased accountability of support agencies in the credit ecosystem. When we saw NPAs, then the role of the chartered accountants, the valuers, and other people who are supporting us in the credit ecosystem, their roles came for scrutiny. There are a lot of discussions taking place. I think today, everybody has realized their role. A lot of systems and regulations have come in individually, voluntarily from their own organizations and also from these people, which is again will help better credit underwriting processes. Then finally, the government ushering in reforms to improve the internal working of public sector banks. This is actually called responsive and responsible banking. It is called the EASE agenda. Now they are split into various points, actually, right from customer service, credit monitoring, credit underwriting, recovery, all the aspects are covered, and the system has evolved where the public sector banks have been rated. And I think the first kind of recognition for the banks which are doing well happened a few weeks back at the hands of Finance Minister, where Union Bank also got one award in Uddami Mitra Port, for doing the MSME right. So because there is a point system, and this will go a long way in strengthening the public sector bank monitoring space and the way we do banking. It is called responsive and responsible banking. And these 5 things are the major changes which have happened. So the confidence what I want to give to you here is right lessons have been learned, right kind of institutions are being built, banks are getting their risk management practices right, the the underwriting process have been strengthened, the verticalization, centralization, all these processes are getting into the public sector space. So I think with this, we will see good credit growth. I think the last installment of recapitalization which came in has helped a lot of banks to even come out of PCA. Not only that, for banks like us, it will help us to improve our provisioning coverage to the expected levels and also gives us some growth capital. And I'm very sure as we go forward with some good resolutions happening, we'll have sufficient capital to grow, and we look forward for a new India where the credit requirement is not only of the large corporate borrower, but also of the small borrowers are met by the banking system for the few years to come before the other institutions really develop and take this space of long-term lending. Till then, we need to handhold, and we all work together to build this new India. Thank you, and I thank Outlook Money for providing me this opportunity to put some of the perspective of the banker across. And thank you very much.
Thank you so much, Mr. Rai. So please do stay with me as I invite Ms. Vidya to please join me on stage to present a token of our gratitude to Mr. Rai. So thank you very much for that, for deep diving into the subject. Thank you so much. Let's hear it for Mr. Rai once again, ladies and gentlemen.